You want to make $100 per month in dividend payouts? That's exactly what we're going to explore in today's video. In fact, this past month alone, made over $700 in 1 month, but when I first got started, my goal was to make $100 per month in dividend payouts. We're going to share with you exactly how to do this, what to watch out for, and a free tool that I'm going to be providing you today for watching this video. So if you're ready to get started, don't be dumb, tap the thumb. Let's get right to the video. $100 per month does mean that you have to have a decent sized portfolio in order to generate those dividends, but it depends on what company you select to invest in or what ETF you invest in and what their dividend rate is. Here's exactly how you do this step by step. Let's start with step number one. We need to figure out what to invest in to generate enough cash flow to get us that $100 per month and more. So the very first thing I'm going to show you is the free tool, and then we'll get into the research. Right here is the free tool. I'm going to include a link down in the description below. Go check out that link. This is absolutely free for you. I think once you go to this site, all you have to do is go up here to the top where it says file, and then you want to say make a copy, and then you can save and download it for yourself. Use it in Microsoft Excel or right here on Google Sheets if you want to. But what we're going to do is we're going to say how much we want to make per month in dividends. In this case, I want to make $100 per month, which is $1,200 per year. Now in this formula, all you had to do is fill out the 2 green boxes. It'll do all the calculations for you. Now, if I wanted to make more than that, of course, you can adjust that number to $500 a month, $1,000 a month, or $25,000 a month. Man, that would be nice, wouldn't it? And then what it's going to do is it's going to ask you for the stock dividend yield percentage, which we'll explore in just a moment, and then how much you need to invest. And this right here, this thing at the bottom, is your goal. And your goal is to build up your portfolio to that amount in order to achieve a passive income every month in dividends. Now, let's start with trying to understand where we can find that dividend yield percentage. Now, personally, I like to use Seeking Alpha. Seeking Alpha is great because it gives me dividend scores, it gives me details behind the companies and everything in between. So that's what I'm going to be using to share with you today. Now, the first thing we're going to look at is Coca-Cola, because everybody that ever talks about dividends always talks about Coca-Cola. So I'll start there. And then I'm going to give you a warning, so stick with me until the end of the video. And then I'm also going to share with you some ETFs that make it a little bit more easier to digest. So here we have Coca-Cola. Now on Seeking Alpha at the top, you can just simply type in either the company name, Coca-Cola, or you can type in the stock ticker symbol, which in this case is KO. It'll take you to the Coca-Cola company. Here is the current price as of the recording of this video at $63.57, but we're not worried about that. We're worried about right down here where it says dividend yield. 2.74%. Now, I actually don't like to look at this chart right here. I like to come up here to where it says dividends just to make sure I get the most accurate information. So we click on dividends, and right down here at the bottom, 2.74%, which means you get an annual payout of $1.76 per share that you own. And they do pay quarterly, as you can see right down here at the bottom, and their last one paid out 12/15/2022 in the amount of 44 cents per share. So that's one example. What we'd want to do is if we're interested in investing in only Coca-Cola and we want to generate $100 per month from only Coca-Cola, we would take that 2.74%, come back to the tool, plug that in right here, and it would tell us how much we need to invest. We'll type in that 2.74%. And of course, don't be shocked when you see how much you need to invest light up here in just a minute, because it's going to seem like a lot, but I'll explain some tips that you can think about for your future as we get through the video. So 2.74, I'm going to hit enter. Right there it is. In order to generate $100 a month, you need at least $43,796 invested in order to generate that in passive income flow off of Coca-Cola. Now remember, dividends are paid out by a company based on their profit. So for example, Tesla, Google, things like that. Right now, they don't pay a dividend. The reason they don't is because they are considered a growth company. So they take all their profits, if they do have profits, and they reinvest it back into the business to continue to grow. They're expanding their operations. They're doing more things. Older companies that have a little bit more of a jive, maybe they even have a monopoly or a huge market share. In the case of Coca-Cola, they take some of their profits and they distribute it to their shareholders in the form of a dividend. That's the point here of what we're looking at. Now let's look at a REIT, for example. REITs tend to pay a little bit more of a dividend percentage. Now REITs are called real estate investment trusts, and it's actually required that they pay out 90% of their profits. That's the whole point of a real estate investment trust. So when you do invest in something like that, you will get naturally a higher dividend yield. So I'm going to pull up the famous O Realty Income Corp. You've seen them around. These are buildings that you most likely have visited or shopped at in the past. Right now, going for a total of $62 a share. Let's click on the dividend tab and take a look at that. So in this case, we have a much higher dividend rate at 4.73%. The other cool thing about O is they do pay monthly dividends. So this is truly getting $100 per month in dividends. In the case of Coke, you would get $400 every 4 months. So we're going to take that 4.73%, hop back over to the tool, and all we have to do is just update that number, 4.73% in the case of O, which means we would have to only invest, look at that, $25,370. You build yourself up to that amount, you'll get $100 a month. Now, one thing to consider is instead of putting all your eggs into one basket, maybe spread that out a little bit. And here's part of my warning for you. If you're interested in getting into dividend investing and you're interested in building up so you get that $100 every single month in your cash balance and you're super excited about it, well, you got to be careful about going down with the ship. Let me take AT&T as an example. AT&T currently going for $18.79 per share. If you actually go to the 5-year chart, you can see they've been having quite an issue, especially right around this time. And the reason for that is they sold off Warner Media and they cut their dividend yield percentage. So let's say you put all your eggs into one basket, in this case AT&T, because you were attracted to, at the time, I think it was right around a 7% dividend yield. So that's exciting, but that's also the warning. Don't fall for the dividend traps. A lot of companies out there, they show these incredibly high dividends. And of course, one would immediately jump in and think, well, this is easy. I'll just put all my money into the highest paying dividend yield. That way I don't have to pay as much and it'll be that much quicker to get my $100 per month. But there's a warning behind that, because if you just chase it, you're putting all your eggs into AT&T or into some other random company. And if that company decides to change the game, in this case, AT&T, they decided to change the game and sell off Warner Media and screw everybody over with a dividend cut. And, they were doing great. They were looked at as a very nice dividend stock for many years. But the problem with that is, you hop over here to the tool and you're chilling like a villain. If it's like at a 7.2% dividend yield, you only need, look at that, you only need $16,000 in order to generate your $100. But then what happens if the company does bad? They cut their dividend in half. You're now not going to make what you need for your $100 a month. But not only that, the growth of the stock fell down. So let's say it was trading for $20, $30, or $50 per share. You're not only losing your portfolio value because it's dropping in price, you're also losing your dividend percentage. So that's why I like to look at exchange traded funds, otherwise known as ETFs. Because ETFs, they track an index of funds. That way, if something gets screwbally with one of these type of things like AT&T or even stock XYZ, which is claiming this high dividend yield, and little do you know they're about to go bankrupt. You don't have to worry about that when you go into things like ETFs. So let's take a look at that, plug that into the calculator. So if we go over here and we look at one of my favorites, which is the SCHD fund, going for $77.74 per share. Of course, it's had its ups and downs, but let's go right to the point and going into the dividends. The dividends are paying at a 3.14%. That's actually pretty good, especially if you consider Coca-Cola and all that other stuff. What they do is the ETF pays out the dividends based on the companies that they hold in their index, okay? So if you wanted to know, well, how many companies and what type of companies are made up in this ETF, I'll show you how to look that up in just a moment. First, I want to point out the fact that this is paid out quarterly, and of course the annual payout, $2.48 per share. Let's plug that into the calculator really quick. 3.14% gets you at $38,217, and invested in SCHD, you would get $100 a month in dividends. So if you come back up here on Seeking Alpha, you click on holdings and you come on down here, you'll see here's some of the things that they hold. So they do have a portion of Coca-Cola, a total of 103 holdings. That means 103 stocks are made up of SCHD. And that's the beauty of it, right? So you can go through and not worry about if one of these things gets a little bit screwball, who cares? The fund automatically cleanses itself, making sure it has the top companies that pay out the best dividends. If you're a little bit worried about the fact that you could lose all your money based on going all in on one particular stock or one very high dividend yield. Now, by the way, if you like all this stuff right here that you're seeing on Seeking Alpha as far as their dividend grade, which is a phenomenal one at A+, this is all provided by the premium account that you can get, and actually the viewers of this channel, Seeking Alpha, offering you a 50% off discount when you use the link in the description below. That'll give you access to more tools, the quant ratings, the dividend grades, and so much more. So hopping back here to the free tool, $100 a month at a SCHD of 3.14% dividend yield, $38,000. Now that may seem like a lot of money. It seems like a lot of money to me, especially when I first got started. How am I going to get from $0 to $38,000 only to generate a measly $100 a month? Well, here's the key. You're not only going to generate the $100 per month, you're going to enjoy the growth of the fund over the long period of time. The people that can be the most patient and the most consistent with their stock market investing tend to be the most wealthiest people. And I can speak from my own example. We had a negative net worth of over $50,000 just a few years ago, and now we are on our way to a $1 million net worth. Yes, millionaires. It's hard to say that, but we're about almost $150,000 away from being millionaires. So the reason that we got from being negative to being positive is being consistent with our investing and debt paying strategy. So one of the key points is come up with a plan. And it may feel like it's going to take forever, but it's funny how these things work. You start off and before you know it, you've reached the goal, and you can be excited about the fact that you're making dividend income every month. So if you need to build up to $38,217, divide that up and almost treat it like maybe it's some type of car payment, or it's some type of thing that you have to do. You've taken it on and you now have to pay X amount of dollars per month, per week, or per year in order to build up your portfolio to your desired goal. Even if it takes you 1 year, 5 years, or 10 years, if you stay consistent, you'll get there before you know it. The best part is I recommend dividend reinvestment programs. Most brokerages offer it. It's called DRIP. All you have to do is just indicate to reinvest your dividends. And on the way, even as you build up to making $100 a month, even if you're getting only 24 cents because you only own one share, reinvest that 24 cents back into the fund. What that does is it creates a snowball effect. It'll keep reinvesting that money, thereby giving you more shares, more opportunity to build up to that $38,000 in this example to get you $100 per month. So make sure you check out the free tool, link down below. If this video was helpful, make sure you share. Check out this video next. We'll see you on the next video.